Hello, and thank you for joining us. I'm Nick Parker in New York City, and I'm joined by Luis Organes. He's jpmorgan's head of currencies, commodities, and emerging markets research. His latest report tackles some of the big questions heading into 2020. In particular, what are the prospects for growth in emerging markets, and which countries should we be looking at in particular? Luis, thank you so much for joining us. We do appreciate it. And let's just dive straight in. Your report summarizes the outlook as better for growth, but not for returns. What exactly is going on there in terms of a dynamic?
We saw this year growth decelerating in emerging markets to 4.1% from 4.8% the previous year, 2018. Yet, despite this deceleration, we had fantastic returns in emerging markets fixed income. We saw somewhere between 10 and 15%. And for 2020, we're expecting growth to be a little bit higher, but returns to be much more modest because the starting point is already quite tight.
Understood. And one of the big questions, I guess, going into 2020 does hang over China. What's your outlook there in terms of growth trends?
We think that the downtrend in growth of China, that it's been evident already for several quarters, is going to continue. I think that Chinese authorities are going to actually cross the threshold of 6% growth. Our specific forecast for next year is 5.9%. So, but there's going to be obviously some different profile by quarters, but the downtrend continues. And I think that Chinese authorities know that they need to tolerate this growth deceleration because of the leverage issue. So in a way, it's a prudent thing for them to allow this deceleration to happen.
So some degree of deceleration there. Are there any clear winners that you think we're looking at in emerging markets next year? There's been some optimism over Brazil, some renewed optimism over Turkey.
So a lot of this is because Brazil, Turkey, and many other countries are coming from very low growth, in some cases even recession in the previous couple of years. So there's going to be a cyclical rebound that is going to favor some of these countries that were with very low or negative growth in recent years. Brazil and Turkey certainly are there. But again, in the growth forecast that we have for next year is only 4.3% versus 4.1% this year. So the rebound overall is quite modest.
In emerging markets, mirroring a global trend, we're expecting interest rates to remain very low in 2020. Do you see this phenomenon feeding through to inflation in emerging markets?
Actually not. Inflation, generally speaking, has been well behaved across EM. Of course, there are some countries where inflation is still a problem, Turkey being one of them. But even in Turkey, we've seen this inflation trend that is allowing Central Bank of Turkey to cut rates. And I would say that the biggest trend, and probably what provided the most support for markets that I mentioned at the beginning, is the fact that since the Fed was cutting 3 times in 2019, that allowed EM central banks to cut rates right and left. We think that process, even though the Fed has signaled a pause, that process of easing is not going to end, partly because inflation is actually well behaved. And as I said, growth, even though it is rebounding, it remains below potential in most places.
And unusually for emerging markets observers and experts like yourself, we are not seeing any major elections taking place in EM markets next year. But what should investors be watching in terms of political developments, do you think?
Well, politics is never, too far away from being a key driver for emerging markets, and 2020 is probably not going to be the exception, even though, as you said, there's going to be no major election this time around. Certainly, we're ending this year with a round of, as you know, protests in many places around the world, including many emerging market countries, which are expressing all kinds of, sources of unhappiness and dissatisfaction, be it inequality, be it low growth, be it, lack of opportunity. So I think that a lot of the issues that emerging market governments are going to, or leaders are going to need to face is confront these, dissatisfied populations. Hopefully they'll do it in a sound way, not to compromise fiscal accounts, not to compromise macroeconomic balance and, engender problems later on. But we don't know. So that is the things that we're going to be monitoring in 2020.
And finally, looking into 2020, are there any particular asset classes you think that might be offering the best returns in emerging markets?
We're still looking at local currency bonds to the extent that, as I mentioned, because inflation is well behaved and central banks are cutting interest rates, we think that probably the duration trade in emerging markets is still a good one to maintain. We have been overweight in EM local currency bonds for most of the year, and it's been a good trade. The one question mark is EM currencies. EM currencies, to the extent that now we're seeing some kind of rebound in global growth, that should support EM currencies versus the dollar, but we think that this is probably a dynamic that investors may want to profit from in the first part of next year. At some point, we think that the dollar strength is not going to, be that pronounced. So we are probably at some point going to turn more cautious on EM currencies, but we start the year being actually also overweight EMFX.
Certainly a complex picture. Luis, thank you so much for joining us. JP Morgan's Head of Currencies, Commodities and Emerging Markets Research. Always good to see you.
Thank you.
And thank you for watching. We'll see you next time.